Hey everybody. So this video today is going to be when not to trade. Now, I need you guys to understand there is 250 trading days in a year. This isn't fucking Pokemon. You do not need to catch a trade every single day. It's actually not good for you, okay? Mentally, like take a break. Stop doing it now. Stop. Don't touch it. Stop. Okay, let's get into this. So, when not to trade. When I identify that there may be chop, and you're probably gonna ask, well, how the fuck do you know if there's chop or not? Right? You don't. Okay. But what you can start to get is signals and some type of little identifiers in the day to kind of help you out. Here's an example, right? All of this is just choppy shit on Tesla. Now, how may I start to gauge this? Well, let's look at each of these candles. I'm looking at the 5-minute chart. I'm using the Thinkorswim trading platform. And if we look at this candle, the very first candle gives me an idea. We start here on this candle and it shoots all the way up here to about $1.51, comes back down to this $1.49, and then it goes all the way down here to $1.48, and it comes right back and closes at a little bit above $1.49, like $1.49.80. Okay, there is a huge range in that candle. The next candle goes up for a little bit, doesn't retest the wick of that previous candle, comes right back down, and it closes within the wick that we had on the first candle. Then the next candle closes within that same price action we had on the very first candle, as well as so did these other subsequent candles. And again, these are 5 minutes of time. So 5, 10, 15, 20, 25, 30, 35, 40, 45, even 50, even 55. I mean, all of this activity, if I draw a circle from the top of this here to the bottom of this, all of this activity stayed within that first candle's wick, the wicks of that first candle. And so you can start to get ideas of that within maybe about 20 minutes of the market open, right? And now that I've identified that, then what I could do is set alerts and say, well, fuck this. I'm not going to sit in here and wait another 20 to 30 or 40, 50 minutes looking at candle by candle. That's stupid, right? So what I could do is set alerts and say, okay, let me know when we break out of this shit. And then at that point, maybe I'll look to take a trade, right? Which that trade came later on in the day. Look at this clean movement. As soon as we broke underneath those wicks, look at this nice little clean move from here from 149 to 148. Nice little put trade. And looked good, right? This little flush, that was it. That was the opportunity. So you don't even need to trade the market open either, right? But don't trade when you identify chop. And again, how do I start to notice chop? Within 15 to 20 minutes of the day, if I start to see we're within the same price action and nothing's really going on, it may be time for me to just put alerts and walk away and come back later. Another time not to trade is when you have already taken 2 losses on the day. If you have 2 losses on the day, what makes you think in your right mind that you're going to take a third trade and it's going to go in your favor? I mean, the math isn't math in here. Right? Now, let's just say for whatever reason, your dumbass decides to take that third trade and you lose that one. Isn't the rule is 3 strikes and you're out, right? So stop trading, close your laptop and be done for the day. Don't take that 4th fucking trade, people. So after 2 losing trades, I tend to be done. Now, if I've had 2 losing days back to back with trading, one of the things that you want to make sure to do is take days off. Stop trading if you are just having a bad week. Get mental clarity. Take time off. Refocus, recenter. We just talked about that in another video, right? Refocus, recenter. Stop doing those things. So these are all examples of when not to trade. Other reasons not to trade is you try to guess what direction the market's going to move before news even comes out. How many of you have got candle fucked when you think, oh, it's going to go puts and freaking Jerome Powell's going to see this and it's going to drive the market even further down. Next thing you know, it goes calls and you just are sitting there, right? Stop doing that as well. These are other examples of when not to trade. Don't trade the news candles. Wait till news drops and then react. Stop trying to be predictive. Other reasons to not trade is you've been successful. Take some time off. Go enjoy the time away. Stop looking at the screen all day. If you are so focused on trying to make money, instead of looking at what money does for you, which is buy back your time, and you're not using that time to be with your family and enjoy your kids if you have kids, or enjoy your freedom and go hang out with friends, you're doing this for all the wrong reasons. Those are all times to not trade. All right? So let me know what you guys think in the comment section below. As always, thank you guys for all your love and support. If you want to stay tuned with what we do and kind of get more info, go to stockmarketwolf.com and sign up and come join us for live trading. If you want to follow me on other socials, go look up Stock Market Wolf on Instagram. Thank you guys so much, and I'll see you guys on the next one.